All right, guys, good morning. Good morning. Welcome aboard to the Morning Note. My name is Carlos Garcia, founder and CEO of Gar Capital. It is October 5th, 2023. On a Thursday, thanks for being with me this morning and every morning, 9 a.m. Eastern Standard Time here on the YouTube channel. This is your first time here. Make sure to hit the like button if you like these videos. Turn on the subscribe button so you don't miss any of our videos. We'll do the recap of the week since we're getting toward the tail end of the week on Saturday. And we'll recap our trades, recap what happened in the market, and preview the next week as always. So if you don't want to miss that, make sure to turn on notifications so you don't miss any of our new videos. That recap is not live. It is recorded and posted on YouTube. Glad to be with you this morning. Dow futures down 72 points this morning. The NASDAQ down about 22. S&P down about 9 points. 1739 on the Russell, down about 0.22%. Treasury yields just went red for the day. Dollar index is red, down 0.12%, 106.66. The VIX is red, 1857, still below 20. I think we printed at 20 on Tuesday, and then we pulled back. Crude oil down about 1% this morning, 83.48. If you guys remember on crude oil, we were as high on Thursday as 95.03. You're talking about a drop of almost $12 in just, 4 days? In about 4 sessions, let's just call it. Gasoline futures, $2.20, up about 0.15%. Gold continues to take a hit, even with the dollar down, 18.29, down about 0.29%. Not exactly the safe haven that people expect with gold. The dollar matters. Silver futures are flat, 21.14. Copper futures down 0.43% this morning. Euro dollar's up 15 pips, 105.20. 148.88. Remember, we just hit 150 on dollar yen. I believe it was on Tuesday, pulling back 148.88, like I just said. 121.35 on the pound dollar. That is flat. Bitcoin is up 125, 27,900. 1635 for Ethereum. That is red. Good morning, everybody. Okay, so we did get some news this morning. Been updating you guys as always every morning on the live market blog. If you are interested, the link is in the description below. Go to our website, select free plan, and you'll have access on our Discord. So let's go over some of the headlines that we got this morning. If you remember yesterday and you were here with the morning note, we told you we'd get a snapback rally, some kind of bounce, some kind of relief bounce, technical bounce, and we did catch it. We did do it. So well done to the team if you caught that bounce out there. We may have a little more. And why do I say that? Put call ratios, 10-day moving average, CBOE, equities, stocks, put call ratios. Higher the puts, more people are short. Higher the calls or lower the ratio, more people are into calls, more bullish. Has risen to the highest since January. We know what happens when we get there in terms of put call ratios. Above 150 yesterday. Only for the 4th time in 5 years. Historically marked the low for the bear corrected period in each occurrence. Since 2006, 9 times. The S&P forward positivity rate, 8 out of 9. The average return is 6%. Now we expect at least 9 to 10% as we get into the end of the year for the quarter. We're going to see where we bottom. That's the key. We do have some inflationary numbers. We have a jobs print on Friday. So maybe that CBOE put call ratio being elevated could mark a bottom. But again, we still need to see every day. Every day things change. So we need to be on our P's and Q's on point of what we're trying to do. So yesterday we did catch Tesla, which was a great trade. Let's take a look at it. New weekly highs on Tesla. You could see that we broke above here, 250.39. I sent it out yesterday at 9:59. I said, everyone watch Tesla for calls. And what happened? Tesla absolutely soared. 63%, got as high as 134% on Tesla. I put the runner in the trophy room, 130%. Look at that. Well done to Tesla. Excellent. We needed that. That was a great trade because NVIDIA reversed on us. We may get a chance to see if it pushes back. IWM reversed on us. I do have some Google calls right here. We are down this morning, but again, we should break out above 136.58. I do have the 137 calls for this week. So that's where we are. But an excellent trade all around on Tesla. Tesla absolutely broke the level that we were looking for, above 250, 252. You guys remember we were talking about that for a while. Let's go to the 4-hour chart. And you can see this is the trend line from the daily. We broke above it. Let's take a look at the daily chart to give us a little more. And again, 414 right there, pretty solid trend line. We got just slightly above it. We do have a gap to fill here at 289.42. Let's see if we can break 262. See if we could target 280 if we get continuation. So I'll be watching Tesla possibly for next week very, very closely. Good morning, Carlos. What's a good price to buy Google shares long term? Well, Google has been holding up very well. That's why we're in calls. We do have a gap to fill here at 140.93. The question really remains, do we have any other shoes to drop in terms of risk? There's always risk, always. So the question is, what could be next? You know, is the bottom in? That's really the question. And really the answer to that statement is we still have some more news coming. We still have the non-farm payroll report on Friday. That might bring us down if we have, just like we did with the JOLTS jobs number on Tuesday where we had that breakdown. If you look at Google, this is setting up, if we do not break out of this, for a reversal. Again, you have the rising wedge setup. This usually means a breakdown. So we may get back down to this gap fill here around 123. I think playing calls against Google are fine. Buying calls, it's fine. That's where I'm in. But in terms of buying it here, I'd wait a little bit. We're just not sure as of yet. If you want a dollar cost average, fine. But in terms of investing, you just got to wait it out. We need 136.58. If not, we may break down below 133 and then start seeing if we can retest. Again, it depends on how high this wedge goes. Obviously, it can continue to kind of bounce up to here. If we kind of set up this here. Oh, shoot. I just removed the drawing. I didn't want to do that. Let's draw it together. So we go by the wicks. Extend to the right. Let me see if I can remove this. Give me a second. So we have the wicks. I'm going to go by this. There you go. So if we go ahead and extend the drawing, extend to the right, and extend to the right, you could see that you do have that wedge forming right now. The question is, if you break above 136.58, then this is invalid. But if this rejects and comes back down, we're going to break down a little more on Google. So there may be a little issue with the price. We got to see if we break out. We got to see if we reject. I know, pretty binary, but that's the reality of the market right now. You could see that wedge. The question is, do we break it? You can see it right here on the hourly. I have the 15-minute chart. I'm staring right at it. Let's take a look at NVIDIA together. I have those calls. They're absolutely nuked, as we know. But do we get a shot at some kind of movement in the market? Do we get some kind of short squeeze? Let's look at the daily together. Daily, you're still holding the 20-day. At least that, holding the 20-day. You want to get above the 50 at 448. You still have that gap to fill at 470. The question is, do we finally break above 452? That's where we reverse from that challenger job, or was it the JOLTS number, if you guys remember on Tuesday where we had that meltdown, which completely killed any kind of call options, unfortunately. So the question is, do we get that push? Let's take a look at NASDAQ futures together. NASDAQ needs to break above 15,000. Right here has been your level of supply, your level of resistance. You gotta break above 15,000 for us to do anything. If not, if you're looking for a bounce here and we start rejecting, we gotta take a look at 14.8 for a short to pull back to 14.8. So the question remains, do we break out above 15,000 or do we retest 15,000 and reject? That's really the issue. In terms of long-term investing, we're getting close, but we're not there yet. If you remember last October where we hit that 2022 bottom, could get an opportunity there, especially with the put-call ratios being elevated. The question is, do we have any more shoes to drop? So we need to be careful. Look at this trend line that we've had on the S&P. Little teardrop here near the 200. If we were to hit the bottom, it looks like one. If it is the bottom, it technically looks sound, excuse me. So that's where we are in terms of S&P. Right on that trend line, you held the 200-day, and again, we talked about 4230, 4200-ish. That's your 200-day. We need to get above 4309. That's your 38.2 fib. Again, if you flip it, it could be the 61.8, depending on how you look at it. But the 50% retracement level, that is a very hard support at 41.55. The question is, do we test the 200-day? We're not too close to it. We're at 42.86. 43.09 might be the confirmation. The only thing I don't like is that you have the 20 breaking below the 100. So more weakness, at least on a technical basis, is to be somewhat expected. But the way I look at it as a trader, too many people are short. I still expect us to bounce. and then maybe retest 43.09 and then roll over into Friday. That could be the scenario, but we just have to wait and see see what yields do. Let's see what the dollar does. Let's see what crude does. Crude is pulling back. We had crude shorts yesterday. Of course, I went light yesterday. The one time I go light on crude oil, I make it. I mean, and we could have held a little more. Our target was 85. 85 was, again, that's the level of previous resistance. Now support, you're breaking below the 50. Boy, could you test 78.65? Possibly. We talked about the seasonality in terms of oil and gasoline. Gasoline has been taking an absolute hit lately. This is deflationary, thankfully, so maybe we get a little bit of a reprieve in terms of prices. Let's see here on crude oil. Here we go. Gasoline demand data yesterday dropped to the lowest levels for this time of year in 23 years. Gasoline futures are at its weakest point since December. Energy stocks taking a hit. So did we hit peak oil for the year is the question. It might look like it, especially if we get to the 100-day moving average of 78.53. Watching very closely. Let's place an alert here at the lows, the session lows, 82.28. And I also want to show this, guys. I know RSI, a lot of people don't like it. And again, it's important just to see overbought. Just overbought. That's what happens. Last time I tried to short 85, we were overbought and we still soared because of that Saudi headline. We're starting to get pretty close to oversold, but let's see if we retest that. Remember, in March we got to oversold and we bounced. So got that big spike and then just pulled back. So again, technically speaking, you're still in a downtrend on crude oil. Let's take a look at the dollar together from Alex. Again, overbought dollar. Last time we've been here, not good, pulling back. And then we had oversold conditions. Like right here, we talked about this on July 15th, that the dollar was oversold. We're now overbought. We're starting to set up for that fourth quarter stock rally. If oil can come down, if the dollar can come down, if 10-year yields can come down, you can see how overbought they are. Again, how overbought in terms of the yields. You're going to get some kind of relief rally. We saw what happened on Tuesday. We saw what happened yesterday. Did stocks fundamentally change overnight? No. Did Apple make more money overnight? Did Tesla make more money overnight? No. It's just the macro environment helps. When you have lower rates, when you have lower dollar, when you have lower oil, these are the headwinds that were hurting stocks. But when they pull back, you'll see stocks go a little higher. So we are setting ourselves up for that. If we break below 42.85 on the Treasury yields, that was the previous high. That would be an excellent sign. We're far away from that. So it's going to be more of the observing, waiting, being patient when things kind of go our way, especially on the upside with put-call ratios being so elevated. That's where we get the opportunity to really hit it and really hit it hard in terms of trading. But as of right now, kind of stuck. What are we expecting? What's next? So let's see if we catch Google this morning. We're holding the 20-hour moving average. Need to get above 136.58. A little bit of a pullback, right about 50 cents. We're about $1.20 away from in the money. We got 2 days to get there. So let's see what we get this morning. The question, I guess the main idea of this video is to say we are almost there. The only reason I say that we're not there is that we have NFP and we have inflation. If inflation can tick down a little lower, that might be the end of the Fed's rate hiking. Could be. You could see that the Treasury market is definitely helping financial conditions go in the way of what the Fed wants. And then you could see how crude oil pulling back is going to give some reprieve to people at the pump. You remember $2.19 on gasoline futures. You can see how much that's fallen. Yeah, just you're going to see some reprieve on the pump. Absolutely. You're $2.19. We were at $2.88 just in August. August is the seasonally strong season. You also have the 200-day, the 20 breaking below that. If the 50-day breaks below the 200-day, you guessed it, it's a death cross. You guessed it, lower gas prices. Maybe, just maybe, $1.87 if we really push to the low side. That's November lows. Do you remember where the stock market was last November? Yeah, I do. Higher. Do you guys remember where the stock market was the November before that in 2021? Pretty high too. All right, starting to notice that we're starting to set ourselves up here, guys, for, let me see if I can activate this drawing. See if I can get to 43. We're starting to set ourselves up for that rally, guys. See if I can get this going here. 187.99. There we go. And there is our fib level. We broke below the 23.6. Gasoline falling is a really great sign for equities, guys, especially consumers. But unfortunately, if demand continues to go higher, that's going to be inflationary. So it's kind of like win, lose, lose, win sort of thing. But this is a good sign for most consumers, is that you're seeing crude oil come down and you're seeing energy come down right as we get into the holiday season. I know, Christmas. Can you imagine that? Just a couple of months away. And we got some data from Adobe, says it expects online holiday sales to hit $221.8 billion this holiday shopping season, November 1 to December 31st, up 4.8% year over year. So does that give us an opportunity to take a look at some retail names that have been beaten down? I know one in particular, Target, has been absolutely brutalized. Yes, absolutely. You name it, it's been brutalized, but it is oversold on the daily. Maybe we get that snapback too. Maybe energy prices kind of help the cause. You remember the last 2 years of November in terms of gasoline? Well, let's take a look at the last 2 years in terms of the equity market. November of last year, of 2021, we were at 4,700. How about November of the year before that? November in 2022, we were at 40.95. 40.95, but off the lows of 35.02. As we get into November, boy, does that really meet the expectations, right? Could we get a little more if we hold that trend line to 4,500? Give us that step up into December to 4,600. We're getting there. Oh man, we are getting close. I'm excited for it. I'm very excited for it. I think we are setting up, guys, for a 10% rally from this trend line. But man, we need things to hold. We need treasury yields to stabilize. We need the dollar to pull back. Gasoline pull back, good sign. Crude oil pulling back, good sign. That's going to hurt energy stocks, as we know. That's part of the S&P. But tech needs love. The tech is holding up everything. I need financials to start bidding. I need utilities to bounce. So it's going to have to be a collective group effort. It's not going to be just NVIDIA, Apple, Tesla that's going to carry this market. It's not enough. We need these big companies to at least have some good earnings, which are coming up October 13th. Banks are going to start doing their earnings. We're going to have buyback soon towards the tail end of October. So we got some good tailwinds heading in our direction. I think as we get into that put call ratio where everyone is in extreme fear mode, that's where you get the bounce. I know, you know me, stay bullish, right? But I think we are setting ourselves up for that. October 5th. Could this be the bottom? I think mid-October is the bottom of the year. We know that with seasonally speaking, that's what has been happening. We have been waiting and waiting and waiting for that stupid seasonality to hit. So let me see if I can get that seasonality one more time. Let's see, we're gonna go to desktop. Here we go. October, right in the 5th. Could we get that next leg down? Possibly. That's the only risk that I have. But after that, November and December tends to be strong. And we have a lot of data to back that up, historically speaking. It's just the way it goes. When everyone thinks the world is over, that's usually when we turn around and the saying goes, when it's time to buy, you will not want to. That's kind of how it is. You remember October of 2022, how low we got. We got to 3,500 on October 13th. 1 year from now, let's see where we are. What a difference. 42.83. What a huge difference. 700 points. 700 points. October of last year, or the year before, we were at 42.85, 43.64. So we tend to hit that low in October. October is not the best month, but the quarter is great. November is one of the better months for the stock market. This is the script. This is how it's going. We are not surprised here at Gar Capital with you guys. We've been talking about this all year on the morning note. Seasonality is leading the charge. Do not be surprised that we get that bounce, but we may have to wait a little bit. It's lining up for us to get that move higher. If we're talking about by end of the year, I think we get to all-time highs by end of the year. I'm still sticking with that. But if we get to 4,700 by then, I mean, I don't think anyone's going to be too upset. So we'll see. Do you think SMAs indicate lower trend in the index? Depends on what moving average you're talking about. Below the 200-day, not great. Let's take a look at Disney. That's something I talked about on the investment club. We're not at fully sold, oversold as of yet. Still a downward trend, still below 200-day. So you're gonna have to hold your nose on this one. Very difficult. So let's go ahead and see if I can auto zoom. Oh, I can't auto zoom here. Let me see if I can do this. Okay, so I can't. Messing with my pointer here. Okay, so we're on a 3-week basis. Let me see if I can. We're at a 34 RSI. Let me see if I can remove this study. Edit studies. We'll remove this study here. Apply. Okay. I can't auto zoom here. Let's see if I can do this. Let's go to the max weekly. That'll give us a little bit. Here is the COVID low on Disney. 79.07. We're right at 79.12. Boy, if you really wanted to buy some shares of Disney, this is probably the place to do it. When it's time to buy, you don't want to, right? I like Disney. I own Disney. The only problem with Disney, and this is the one, is that yes, the sentiment has been beaten down. Could we get just a little more is the question. That's really it. And if you're talking about more downside risk, it's 44.21. Levels we haven't seen since 2010. Very unlikely we get there unless we have some kind of bad news. I don't know what it would be. I'm trying to rack my brain on what is the black swan event. I guess a credit event. One thing I wanted to speak to you guys about the Fed, and I've said this many times. The Federal Reserve, since Powell has been there, maybe before that, they don't stick to their word. It's just a fact. Everything they say, they just switch on a dime. And it's hard to have any kind of accountability with them or even to trust them. The one thing I'm afraid of, personally, is that if the labor market starts to crack, we get a little spike in unemployment. They flip and cut rates. 2018, I have been here before. 2018 December, Christmas time, I'll never forget it. The market, the Federal Reserve raised rates, the market absolutely tanked. I was completely offsides. I went that week in trading, I think 0 for 10. Think about how horrible you feel. Thousands of dollars gone in just a blink of an eye because they increased rates. February 2019, they cut rates and the market bounced. Can't make this stuff up. Very difficult to play against the house. And the Federal Reserve prints the money. So if the dollar's very strong here at 106.69, and let's say you're short and you're thinking, that's it, we're gonna nuke. And the Fed says, you know what? We're gonna cut rates. We're gonna expand QE. Who cares? The dollar's strong, right? Versus the world. What do? Holding puts. You're gonna hate yourself. Oh my God, what the hell? It's rigged. And I know that feeling. Do we get there is the question. Does the labor market start to crack? Reminder, just a reminder, guys, when the Federal Reserve is saying that rate cuts are gonna be delayed till later if we have rate cuts, what they're saying is recession. You don't do rate cuts when times are good. You do rate cuts when times are bad, when there's a recession. And if they are saying we're not going to have rate cuts anytime soon, they're saying the market is strong. They're saying that the economy is strong. Just remember that. So when it comes to Disney, boy, could you hold your nose right here and buy at 79.07? Not a terrible place to buy some. If you lose a little bit, we have to put a stop there. I'm watching it very closely. The COVID lows, my goodness. We hit the COVID lows. One more before the road. Again, I want to see if Target hit those COVID lows too. No, we have not. The COVID low is at 90. $16 away. Man, could we get there? I'll be watching that very closely. So what haven't we priced in is the question. What's all the bad news that we are missing? Every day, everything changes. Every day there's something new. So we have to be vigilant. Do our research and see what happens. That's really it. Have a great rest of your morning, guys. Thank you so much for joining me in the morning note. We got about 4 minutes left until the bell. I will catch you guys on the Discord blog live, and have a great rest of your morning. We'll see you guys tomorrow for the next morning note. Cheers.